Hi, and welcome to another session. In this session, we will be learning the rules for debit and credit as per the modern approach. Now, the rules for debit and credit have been explained as per the traditional approach and as per the modern approach. The videos explaining the rules as per the traditional approach for Indian boards and for those studying in Cambridge have already been posted on the channel. The link of those videos would be provided in the description box below. In this video, we are looking at the rules based on the modern approach. As per the traditional approach, the accounts are classified as real, nominal, and personal. But as per the modern approach, all the accounts in accounting are classified as assets, capital, liabilities, expenses, and incomes and revenues. In this video, the format of journal is based on the Cambridge syllabus. In case you are studying in an Indian board, a separate video has been made for you. The link of that would be provided in the description box below. In this video, we have used accounting formats, so it would be good if you could watch the video in the full screen mode. Also, keep a paper and pen next to you so that you can make notes of the new points that you come across while you're watching the video. As per the modern approach, the accounts are classified as assets, capital, liabilities, expenses, and incomes and gains. It would be nice if you could pause the video over here and make a note of these categories. So now let's have a look at the rules. So we will be looking at the rules over here, and later we will be taking up transactions and applying these rules and posting the transactions into journal. So the rule for assets is debit increase in assets and credit decrease in assets. So whenever a business buys the assets increase in the business. So purchase of assets is debited, and whenever a business is going to sell its assets, then decrease in assets would be credited. For expenses, the rule is debit increase in expenses and credit decrease in expenses. Now, example of expenses is wages, salaries, and rent. So whenever a business is going to incur expenses, suppose wages is paid, so it needs to be debited. And whenever there is a decrease in expenses, that needs to be credited. We will be taking examples for each of the classification and posting entries in the journal. The rule for capital is credit increase in capital and debit decrease in capital. So when does your capital increase? If you remember your accounting equation, when the owner introduces money in the business, capital increases. Therefore, when owner introduces capital, it needs to be credited. And when he withdraws money, so whenever there is drawings, that needs to be debited. The rule for liability is credit increase in liability and debit decrease in liability. And the rule for income is credit increase in income and debit decrease in income. So here you can see I have made a consolidated table from the rules that we just saw. You can make a note of the rules by going back to those slides, and you can also make a note of this chart that gives you a glimpse of all the rules over here. So whenever there is increase in assets or expenses, it needs to be debited. Or the rule for assets and expenses is debit increase and credit decrease. So if assets increase, you debit it. If expenses increase, you debit it. And if they decrease, you credit it. And for capital, liability, and income, whenever there is an increase, it needs to be credited, and whenever there is a decrease, it needs to be debited. It would be good if you could pause the video and make a note of these rules, so when I'm explaining the transactions and how to post them in the journal, you will be able to refer to them. So for each of the transaction, we are going to follow certain steps. So the first step is reading the transaction. Once we have read the transaction, we will identify the two aspects or two accounts involved. Accounting is based on double entry system of bookkeeping. Therefore, every transaction has two aspects. Therefore, whenever there is a financial transaction, there will be two accounts involved in it. So the second step is we are going to identify the two accounts involved. Once we have identified the two accounts involved, we will identify to which class does each of the account belong, or to which category each of the account belongs. Once we have done that, we will apply the rule and identify what to debit and what to credit. And once we have done all of this, the task is simple. We record the entry in the journal. Before we actually go ahead and record the entries, let's have a look at the format of the journal and also understand the structure of a journal entry. So this is what your journal looks like. Journal is the place where the transaction is recorded first. Once the transactions are recorded in the journal, then they are posted to ledger. So this is the first place wherein transactions are entered in chronological order. So the format of journal has a date column, details column, a column to write the debit amount, and a column to write the credit amount. If you are coming across this format for the first time, please make note of it in your notebook. Now that we know what a journal looks like, we are going to post journal entries into this book. Let's first have a look at the structure of a journal entry. A journal entry has three things. So here you will write date, but in details column, what do you write? In the first place, you will write the name of the account to be debited. So account to be debited is written first and the amount is written in the debit column. Once we have done that, then in the second line, we write account to be credited and the amount in the credit column. Once we have written both of these, then we write a small sentence over here, which is called narrative. Now, a narrative is a brief description of the entry. We will be doing all of this ahead, but this is what you have to remember, that the structure of journal entry has three things. Account to be debited first, account to be credited second, and then a narrative. You cannot change the structure of the journal entry. For example, you cannot write the name of the account to be credited in the first line and the name of the account to be debited in the second line. It has to be as per this. If you want, you can make a note of this, as this is going to help you post journal entries whenever you are doing in your class. Now that we have read the rules and also seen the structure of a journal entry, let's take few transactions, apply the rules to them and record it in a journal. So the first transaction is January 1, purchased buildings and paid through cash. Whenever you are just starting to do journal entries, it is better to do some workings before you actually record it into the journal. So this is a table that is there that you can use for doing your workings. It helps you understand the logic. Once you have recorded 25 to 50 transactions in this table and then into the journal, you will be able to understand the rules properly. So the first column is date, then the two accounts involved, then the nature of account, that is what is the category to which each of these accounts belong, then the rule, then the debit amount and the credit amount. Now let's read the transaction one more time and try and identify the two accounts involved. So purchased buildings and paid through cash. So the first account is buildings. What is the business buying? The business is buying buildings. And how is the payment made? The payment is made through cash. Therefore, the two accounts involved in this transaction are buildings and cash. So the date is January 1. We have identified the two accounts involved. Do you remember the 5 categories? Assets, capital, liability, expenses, and income. Building is an asset. What are assets? Assets are resources of the business that would be used by the business again and again to generate revenue. Therefore, buildings is an asset, and cash is also a resource of the business. Therefore, cash would also be an asset. And the rule for asset was whenever there is an increase in the asset, it needs to be debited. And whenever there is a decrease in the asset, it needs to be credited. So here, the business is buying buildings. Therefore, there is increase in buildings. So buildings account needs to be debited. And therefore, we have written the amount in the debit column. Now, to buy this building, we are paying cash. Therefore, the cash balance, which is an asset, is decreasing in the business. And what do? When the asset decreases, you credit that account. So, the cash account would be credited. Let's do it one more time. The two accounts are buildings and cash. Buildings is an asset for the business. It is a resource. Cash is also an asset. And the rule is whenever there is increase in the asset, you debit it, and decrease in asset is credited. Buildings is increasing because business is buying buildings. Therefore, the buildings account need to be debited, and cash is decreasing because you're paying for buying the building. Therefore, cash account needs to be credited. Now, let us see how we will record this in our journal. What you can do is you can create this workings on one page and draw the format of journal on the other page. So once you have done the workings, you can simultaneously post that entry into the journal. So this is our journal. So the first transaction in our journal is buildings account debit and cash account credit. So buildings is written first and in the debit column the amount. Cash is written second and in the credit column the amount. And the narrative is buildings bought by cash. While recording entries in the journal, there is one thing you need to remember. That whenever you write the credit entry, you should always leave some space over here and then write the name of the account to be credited. So buildings account debit, you would leave some space and then the name of the account to be credited, which is cash account. And the narrative is buildings bought by cash. So we just saw the application of the rule of assets. Now, let's move ahead and take another transaction. Now, let's take one more transaction. So on January 3rd, the business purchased machinery worth 45,000 from Anil on credit. So here, the business is buying an asset and it is buying the asset on credit. Let's first identify the two accounts involved. So the first account over here is machinery. What is the business buying? It is buying machinery. And how is the payment being made? There is no payment made. It is on credit. So the second account is name of the person from whom the machinery is bought on credit. So the first account over here is machinery and the second account is Anil. So the two accounts involved over here are machinery and Anil. Now let's do the workings before we actually post this entry into the journal. So you've already recorded entries in this format. So you would just leave a line, then write the date, and the two accounts involved are machinery and Anil. Now machinery is a resource for the business. Therefore, it's an asset and the asset is increasing. The second account is of Anil. Now, Anil is providing the machinery on credit. Therefore, it is the liability of the business to pay money to Anil. Therefore, this is going to be a liability of the business. And the liability is increasing. It's kind of a borrowing you have taken. Let's recall the rule of assets and liability one more time. So, for assets, the rule is debit whenever there is an increase in the asset and credit when there is a decrease in the asset. And the rule for liability is whenever there is increase in liability, it needs to be credited. And when there is a decrease in the liability, it needs to be debited. So here there is increase in the asset, therefore it needs to be debited, and increase in liability is credited, therefore Anil's account needs to be credited by 45,000. So let's do it one more time. The two accounts involved are machinery and Anil. Machinery is an asset for the business. From Anil, we have kind of taken a loan. So his account becomes a liability for the business because it's kind of a borrowing. So there's increase in asset and increase in asset is debited. There is increase in liability and increase in liability is credited. I hope you are understanding. Now let's record the entry in the journal. So in the date column, you will write January 3. So you have January 1. You will leave a line and you will record the entry for January 3rd. Machinery account debit. So first you would write machinery and in the debit column 45,000. In the second line, you would leave some space and then write the name of the account to be credited. And in this case, it is Anil's account. So you write Anil over here and in the credit column, the amount 45,000. And the narrative is machinery bought on credit from Anil. So machinery account debit, Anil's account credit, and the narrative is machinery bought on credit from Anil. So in this transaction, we saw the application of the rule of liabilities. Now let's move ahead and record one more transaction. So the date is January 5th and the transaction is introduced capital in business. So the owner has introduced capital in the business. So here the first account is capital and owner is giving money to the business. Therefore, the second account is going to be cash. So the first account is capital and the second account is cash. Now let's do the workings first. So this is the next entry. You would leave a line and then do the workings and then go to the journal and record the entry. So date is January 5th. The two accounts involved are cash and capital. Now cash is an asset for the business and capital would come under the category of capital. So cash is an asset. Capital, the nature of account over here is going to be capital. So the rule for asset was whenever there is increase in the asset, you debit. Let's recall the rule for capital. Whenever there is increase in capital, it is credited, and whenever there is decrease in capital, it is debited. So here the owner is investing more money in the business. Therefore, his capital in the business is increasing. So capital account needs to be credited by 1,50,000. Let's do it one more time. The two accounts involved are cash and capital. Cash is an asset and capital would come under the category capital. There is increase in cash in the business because owner is investing more money in the business. Therefore, cash account needs to be debited by 1,50,000. And there is increase in capital because more investment is made by the owner. Therefore, his account needs to be credited by 1,50,000 or 150,000. Now, let's move ahead and record this in the journal. So again, you would leave a line and then record this entry. What is journal? In journal, you record entries in chronological order. So this is going to be the next entry. So January 5, cash is the account to be debited. So it would be written first. So cash account debit, and in the debit column, we will write the amount. We would leave some space and then write the name capital, and then in the credit column 1,50,000. So cash account debit by 1,50,000 and capital account credit by 1,50,000. And the narrative is capital introduced by the owner. In this transaction, we saw the application of capital account. So up till now, we've seen how do we apply the rule for assets, the rule for liabilities, and now in this entry, rule for capital. Now let's move ahead and have a look at the next transaction. So the next transaction is January 6th, sold inventory worth 30,000 in cash. So the business is selling inventory for the purpose of generating revenue. So whenever a business sells inventory, the name of the account that you are going to use is going to be sales. So the first account over here is going to be sales and the second account is cash. Now let's do the workings. So date is January 6th. The two accounts involved are cash and sales. What is sales? The name of the account that you will use whenever a business is going to sell inventory. Cash is an asset and sales is an income or revenue for the business. So this is asset and sales is income. There is increase in cash because you get money whenever you sell inventory. So cash is an asset and there is increase in asset. So cash account needs to be debited by 30,000. Sales is an income for the business. And what was the rule for income? Credit, increase in income, and debit, decrease in income. Here, whenever you sell more, your income is increasing. Therefore, you need to credit sales account. Let's do it one more time. The two accounts involved are cash and sales. Cash is asset for the business and sale is an income or revenue for the business. When sales is done or when inventory is sold, cash increases, sales increases. Increase in cash would be debited because it's an asset. Increase in asset is debited. Increase in sales is credited because sales is an income and increase in income is credited. Now let's record this entry in the journal. So the date is January 6th. Cash account needs to be debited, so that's written first and in the debit column 30,000. In the next line, we will leave some space and the account name is sales. So sales account credit and in the credit column 30,000 and the entry is inventory sold in cash. So cash account debit, sales account credit and narrative is inventory sold in cash. Now let's move ahead and record the next entry. So the date is January 7th and the transaction is purchased inventory worth 40,000 in cash. Now whenever the business buys inventory, the name of the account you are going to use is going to be purchases. So when the business buys inventory, the name of account is purchases, and when the business sells inventory, the name of the account is sales. So here the name of account is purchases, and how are we buying this inventory? We are paying by cash. So the second account is cash. Now let's do the working. So the date is January 7. The two accounts involved are purchases and cash. Now purchases is an expense for the business. The business is spending money. So it's an expense for the business. And when you purchase more inventory, in a way your expense is increasing. Therefore, there is increase in expense. And do you remember the rule for expenses? It was debit, increase in expenses, and credit, decrease in expenses. So here the account is purchases. It is an expense and there is an increase in the expense. Therefore, purchases account needs to be debited by 40,000. The second account over here is cash. Cash is an asset. Because you're paying for purchases, your asset is decreasing, and decrease in asset is always credited. Let's do it one more time. So the two accounts involved are purchases and cash. Purchases is expense for the business and there is increase in the expense, and based on the rule, purchases account needs to be debited. Cash is an asset for the business and asset is decreasing, and based on the rule, whenever there is decrease in the asset, you credit that assets account. So here cash account needs to be credited. Now let's record the entry in the journal. So again, we would leave a line and then we will record this entry. So the date is January 7th. First, we are going to write purchases account as it is the account that needs to be debited. So purchases account, and in the debit column, 40,000. In the next line, we will leave some space and we will write cash because this is the account that had to be credited. So cash account credit, and in the credit column, 40,000. And the narrative is inventory purchased by cash. So purchases account debit, cash account credit, and the amount in the respective columns. Let's quickly do one more entry. So the date is January 8th. Paid salaries worth 10,000 through cash. So here the first account is salaries because what is being paid? It is salaries which is being paid. And how are we paying salaries? Salaries are being paid by cash. So the two accounts are salaries and cash. Now let's do the workings. So the date is January 8th. Accounts involved are salaries and cash. Salaries is an expense for the business. Therefore, in nature of account, I have written expense, and the expense is increasing. Why? Because you're paying salaries. Therefore, you're spending more. So your expense is more. So there is increase in expense because you're paying salaries. So salaries is an expense. It is increasing. And what was the rule? Whenever there is increase in expense, it needs to be debited. Therefore, salaries account needs to be debited by 10,000. Now the second account over here is cash. Cash is an asset. It is decreasing because you're paying salaries. And whenever there is decrease in asset, you credit that account. Therefore, cash account needs to be credited. So the two accounts are salaries and cash. Salaries is an expense. There is increase in the expense. So salaries account debit by 10,000. Cash is an asset for the business. There is decrease in cash. Therefore, cash account needs to be credited by 10,000. Now let's record this entry in the journal. So the date is January 8th. The first account is the account that needs to be debited. So salaries account debit, and the amount in the debit column 10,000. Next line, you would leave some space, name of the account to be credited, which is cash, and in the credit column 10,000. And the explanation or the narrative is salaries paid by cash. So salaries account debit, cash account credit, and narrative is salaries paid by cash. So in this session, we have learned the rules, we have seen how they are applied, and we also recorded them in the journal. I hope you have been able to understand this. I will be posting more videos on journal entries so that you can understand it more. In case there is any doubt or there is any question, you can leave them in the comment section below. If you found the video useful, then give it a thumbs up and subscribe to our channel. And do press the bell button to stay notified about all our future videos. Till the next video, bye-bye.